Hi folks, and welcome to this week's Connected Finance Talk. I'm here with Mihalopoulos again, and today we're going to talk about something that everyone wants to know, and that is how do you pay off your mortgage as soon as possible, as quickly as you can. So George, everyone wants to pay off their home loan as soon as possible, we know that. Property prices have increased over the years and they're continuing to do so, putting a little plug in there for us, if you're thinking of selling your home, now is the best time. Lots of buyer activity and we'd love to help you. But in doing so, we want George to tell us and share with us some things that clients can do to pay off their mortgage quicker.
Yeah, it's a real interesting topic at the moment. It's a discussion I have with all my clients during the interview process. As you mentioned, Monique, ultimately, property prices have increased substantially over the last few years, which means home loans and debt levels obviously continue to increase. So it's about looking at doing little things to ensure that you're giving yourself every opportunity to reduce your home loan as quick as possible. The first little tip that I'll say is, at the moment you have the opportunity, whether it's a home loan or an investment loan, to make your repayment type as principal and interest or interest only. I'd always recommend principal and interest. Principal and interest is where you're making repayments, and over the life of the loan, the actual balance will reduce as you go along. You also have the opportunity when you're first starting out your loan with the loan documents, you're signing what's called a direct debit form, and you're instructing the bank to take the minimum repayments from your savings account. On that direct debit form, you have the opportunity to select an extra repayment, and you can choose that extra repayment to whatever you want to be, whether it's $20 a week, $50 a week, or monthly, whatever the case may be. I always recommend from the outset trying to get into the habit of making an additional repayment. Rather than saying to yourself, oh look, I'll make that additional repayment manually myself, it's good to get into a habit of completing it on a direct debit form where the bank will automatically take an additional repayment from your savings or from your pay, and before you know it, it'll just become second nature. You won't miss that money, and a year down the track you'll notice you're getting ahead in your repayment. Little other things, obviously a lot of clients receive bonuses or incentives during the year, and sometimes that can go towards a car purchase or an upgraded home or buying a discretionary item. I always advise, when you come across additional funds, put that straight into the mortgage. Keeping in mind, majority of home loans these days have an offset account or have a redraw facility, so any additional funds you put into your home loan, you can redraw those funds back out. But the great thing is, once you've seen the additional funds, so whether it's a bonus for the year or bonus for the quarter, and you're putting that into your account, all of a sudden you see the balance reduce and you realize, okay, I'm actually getting somewhere, and it's a pretty good feeling seeing that balance lower as well. So it's absolutely great. So principal and interest repayments, trying to set your minimum repayment a little bit higher, so making an additional repayment from the outset, and also incentives, any additional cash flow you come across, putting that straight into the home loan. Those are probably three key things that are going to help you start to reduce your home loan as fast as possible.
Great advice. Now this one's one that I guess is, well, I'll let you answer it, because a lot of people will also wonder if they have an investment loan. Do you recommend they pay this off as quickly as possible as well?
Yeah, look, it's a good question, because everyone tends to set their investment loans on an interest-only basis, and what that means is you're purely just paying the bank's interest cost. So therefore, time goes by pretty quick, and I've seen this happen all too often, where a client will set up their investment loan, and 5 years down the track, they've purely just been paying interest only, and therefore the debt or the balance of the loan remains exactly the same. One thing I'd say is, if you have a home loan and you have an investment loan, your main focus is your home loan. You have to keep in mind that your home loan is non-tax deductible, so it's a non-deductible debt, whereas your investment loan is a deductible debt. So therefore, when it comes to tax time, there's negative gearing. You can claim the interest expense of your investment loan. So therefore, if you have a home loan and if you have an investment loan, you're definitely putting all your additional money towards your home loan, because there's no tax benefit. But if you purely just have, if you're fortunate enough to pay off your home loan and you purely just have an investment loan, I'd always recommend, again, structuring the repayments on principal and interest, which means you're paying off the loan. And again, you get two, 3 years down the line, and you actually see the balance reduce, and it's a great feeling.
So you're just not waiting on the market to rise to actually have some equity in the property. So great tips there for clients on how to pay off their home loans and their investment loans as soon as possible. Would you say a difference in interest rate makes a large difference to how long it's going to take to pay off this loan?
Yeah, it certainly does. And especially in this environment where there's been a number of changes to interest rates over a short period of time, I always recommend to clients to review their current interest rate. I come across scenarios where clients have not reviewed their interest rate for quite some time. They thought they're on a great deal, but unfortunately they haven't been looked after by their bank or their existing lender, and all of a sudden their interest rate could almost be 0.5% cheaper, or even more, up to 0.7% cheaper. So therefore there's substantial savings to be had purely by just being on the best finance package with the best rates and best fees. And that over a period of time will certainly help reduce your home loan as quick as possible as well.
Thanks, George. Just on that, guys, we actually did do a video a little while ago on interest rates and how to make sure you're actually paying the lowest interest rate, even with your existing provider. So I urge you, if you haven't seen that one, to pop back through either George's Facebook page or mine, and you'll see that video because there's some great advice in that. So again, George, thank you so much. I look forward to our conversation next week.
Excellent. Thank you.